Hello everybody, it is Saturday, so we are back for another financial education video. We also on Wednesdays do portfolio reviews, so if you're interested in what we're buying or selling, come back and check those out on Wednesdays. For those of you who are new to the channel, my name is Paul Novak and I absolutely love all things personal finance. And really, my goal for this channel is just to share the tips and tricks that we've learned to help others put their money to work and get ahead financially. As you know, I like to keep this content simple and geared towards beginners, and today is going to be no different. Today we're actually going to talk about getting started in the stock market. And I actually did a video a while ago called Investing for Beginners, and I really like how that video turned out, but a lot of people are asking me questions on Facebook groups and forums specific to the stock market. And in that video, I walked through budgeting, 401k investing, Roth IRAs. I walked through all that other stuff before I even got to the stock market section. So I thought, let's cut all that stuff out. If what people really want to know is investing in the market, then that's what we're going to do. So that's what this video is going to be all about. And if you find these videos helpful, I'd always encourage you, smash that like button and subscribe. We respond back to all comments, so if you have any questions or topic recommendations, I'd encourage you to post. And something new is we've also started a Facebook group called Saving and Investing for Beginners, and I'm going to place a link to that down in the description below, and I'll show here on the screen what it looks like. Really, the basis behind us starting that group is just to create a community for people to come and ask questions about finance or ask questions about saving or investing, so we can all kind of learn and grow together. So I'd encourage you, if you're interested, to join. And also, if you're interested in saving or investing, like I say in every single video, I've got a lot of different links down below. And with those links come a lot of promos. If you're interested in opening up a savings account, there's free money. Brokerage account has free stocks. So there's a lot of different options down there for you. And with that being said, let's get into it. So, what brokerage are you using? Did you hear that fintech is really hot right now? What are your thoughts on short squeezes? Are you an investor or a speculator? That PE ratio is crazy. Do you trade options or do you also invest in margin? The value of the market is going crazy right now. It is definitely going to crash. What the heck does all of that even mean? You know, one of the things that's frustrating for me is people make investing so darn complicated, and it doesn't have to be that way, right? I've learned from starting to invest that this stuff is extremely simple. So I'm going to get you started in this video, and I kid you not, with 3 simple steps to start investing. And I promise, if you hold to those 3 steps for long term, you're going to be successful. This stuff does not need to be hard. All right, in this week's video, we're going to cover just a couple main things. Again, trying to keep this simple. So the first thing you got to do before you even invest is pick a brokerage. So we're going to talk through possible brokerage options. The second thing we're going to discuss is a strategy for investing. I think that's so critical. And hint, the strategy is going to be dollar cost averaging, but I'll explain what that means as we go through it. And then the next thing I want to get into is what investment should you buy, right? Once you actually get into your brokerage and you're ready to go, there are thousands, probably tens of thousands of different holdings or different stocks you can buy, and I'm going to walk through exactly what I would do to begin. And then just to round it out, I'm going to go through what some of my tips for investing are and really what to watch out for. And remember, I've got chapters as part of all of these videos, so if there's something specific that you want to see, click on the chapter. You don't have to watch the whole video. And again, I'm keeping this content geared towards beginners, so all the concepts that I talk about, I've probably got a video that goes into greater detail. I'll place links throughout the videos that if you want to see that greater detail, you can watch that video. But for this, I'm going to try and keep it relatively simple. All right, so let's start by talking brokerages. It's a common question that I see on a lot of Facebook groups or people that are asking me that want to get started. What brokerage should I pick? And to be honest, I don't have a lot of skin in the game. So I use Robinhood, and the only reason being is that's where I got started, and I've just stuck with them all the way through. To be honest, if I could do it all over again, I probably would have gone with somebody like Fidelity. Biggest reason being is they're actually an established brokerage versus just being an app. And I say that now because having an app in the beginning was not a big deal. But now that our portfolio has grown to $85,000, I literally can't believe it's that big. Having a more established brokerage, I think, might be a little bit better than an app. And there's really two main things I want you to look for when opening a brokerage. Again, let's keep it simple. The first one being that the brokerage offers fractional shares. And like I said earlier, I'll place a link to my video specific to fractional shares and why they're so important. But I'll go over the basics in here just so you guys get the gist of it. And the biggest thing is with fractional shares, it allows you to buy stocks or index funds as part of a share. So I'll use an example looking at Apple just because it's one of the most popular stocks that's out there. Today, their share price trades at about $130 per share, meaning if you are with a brokerage that doesn't offer fractional shares, you can't buy Apple unless you start with $130. You know, I want to make sure that you can buy in for $5, $20, $50, something that's smaller than that, and that's where the fractional shares come in. And I say that because this video is geared towards how to get started, right? So if you're just starting investing, you probably don't have tons of money to throw at investments. You know, so that's my first reason. My second reason is even if you do have a ton of money to throw into the market, who feels comfortable when they don't know what they're doing, throwing tons of money into the market? I sure know I didn't do that, and that's why I started relatively small. So with fractional shares, you can buy in at a very low dollar figure, and as time goes on, you can work on building up your confidence, and as you get more confident, you can always put more money in. And the second thing I want to talk about is just making sure that your brokerage does not charge any trade fees, right? You do not want to be buying or selling stocks and paying every single time you do, especially if you're doing it at a small amount. I don't want to have all your profits right out of the way eaten up by fees. And some of the brokerages that offer both of these, because trade fees now, not paying them is relatively common. Most brokerages don't charge that anymore. But some of the solid places you could start is Fidelity, you could use Robinhood, you could use Charles Schwab, you could use M1 Finance, you could use SoFi, Public. There's a lot of different options out there. Those are probably some of the main players that meet those two qualifications. So if you are looking for a brokerage to pick, I'd probably start with one of them. And again, if I had to make a pick, I'd probably start with Fidelity. All right, so now that we've got a brokerage pick, the second thing I said I wanted to talk about is having an investment plan. We want to make sure that we've got a plan when we go into this and we're not just blindly throwing money into the market. And you being a beginner, I am not focused at this point on how much money you're investing. It's not about throwing ton in. It's about building solid investing habits so that we can sustain the growth and sustain investing long term. So the number one thing with our investing plan is we are not trying to time the market. You are brand new to investing. You don't know how to time the market. And I'm going to let you in on a little secret. Come on, come here. Nobody knows how to time the market. Right? That's a myth. Anybody that tells you that they know how to time the market, I would turn around and run for the hills. Right? So whether you're a new investor or whether you're a seasoned investor, if people knew how to time the market, those people would be multi-billionaires and never have to work again. So all these people and apps and things that's telling you, hey, we know when the market's going to dip or we know when it's going to go up, do not buy into that. And once I tell people that we're not going to time the market, the next thing they say is, so then when the heck are we going to invest, right? If we're not going to time the market, when do we start? And I tell them the same thing every time. The time to invest is very simple. It's right now. It's investing all the time. And I'm going to explain that a little bit further, but it's a strategy called dollar cost averaging. And when it comes to dollar cost averaging, like I said before, I've got another video for that, which I'll post in the link above. But really, all that it is we're going to focus on investing every single payday, right? So every single time you get paid, I want you putting money into the market. And I don't care if that's $5 every time, which is what I do for my kids. At this point, like I said earlier, I want you guys to build solid investing habits. I'm not focused on you throwing tens of thousands of dollars out there. I just want you to get in the routine of every single time you get paid, you're going to invest. And really, the reason why I want you to do this is because I want you to focus more on making sure that you're investing every payday than watching what the market's doing. And in doing this, sometimes you're going to invest in a down market, which is good because when you're investing low, that money is going to grow and you're going to make a decent amount of money. Sometimes you're also going to invest when the market is high and it might drop a little bit. But using this strategy long term, you will be successful and that money will continue to grow. All right, so now we've got step one out of the way, right? We selected our brokerage. We've got step two out of the way. We have our plan, and that plan's going to be dollar cost averaging in weekly. Now we're up to the third thing, the last thing. It is this simple. What the heck am I going to buy? And what we're going to do in this video is we're going to keep it extremely simple. We're going to buy index funds. And the index fund that I would recommend for a beginner is going to be VTI. And an index fund, just to try and simplify this, is nothing more than a bunch of stocks all grouped into one fund. So if you look here on the screen, it's going to show the main stocks by percentage in this VTI fund I just recommended. And you can see all the different stocks are listed over here on the left, and then it's got all the percentages. And now you might be asking yourself, why would I want to buy an index fund when some random dude over here on the internet just told me to buy GameStop stock because it's going to go to the moon and I'm going to make a fortune overnight? Don't listen to a guy on the internet for stock tips. Now, wait a minute. I know I'm a guy on the internet giving stock tips, but I'm different. But I mean, everybody else, don't listen to what they have to say. So the reason why I want you to get into index funds right out of the gates is because it's going to give you a stable investment platform, right? Indexes are also going to give you instant diversification. So we're going to talk about VTI, what that means. That index fund is actually invested in the entire stock market. So all the stocks have a portion in this fund. So when you're buying VTI, you're not buying one stock, you're buying all of the stocks. And with a fund like this, right, you're not going to have crazy gains, but you're also not going to have these dramatic swings where you're losing your money overnight. It's going to be stable. And when I say stable, that a lot of times turns people off because people that want to invest, want to make a ton of money. I'm here to say the fund has performed extremely well. So over the last 5 years, VTI is up over 100%, meaning it's having annual gains of over 20% a year and has averaged that for over 5 years. So if you'd have put your money in 5 years ago, you would have doubled what your money's worth. And if you want to learn more about index funds, shocker, I've got another video that explains more in depth of what index funds are. I'll place the link up here below. But really for me, it is that simple when it comes to investing. So don't be scared or shy away from it. My only regret is not getting started sooner. So if you're watching this video, I'd encourage you to get started. And remember, we covered really just 3 basic things. One is picking a brokerage. 2 is dollar cost averaging and having that plan where we're going to do it every paycheck. And the 3rd was investing in index funds. So don't get overwhelmed or freaked out when it comes to investing. And now, like I said at the end, I just wanted to go over some of my tips and tricks. And the very first one that I'm going to give you is investing can be emotionally draining. So a lot of people, especially when they start, and I'm guilty of it too, watch that little ticker and see how their account is doing day by day. And, you know, if you look at up here on the screen, literally this day at its lowest point, we lost over $800 in a day. That doesn't feel real good. But a little tip that I can give you is if you are literally following this strategy and dollar cost averaging in index funds and you're not liking the way your daily outlook looks, click on all time, because if I do that, and you can see that on the screen now, we're up over $8,000 since we've started doing this, right? So don't freak out in the short term. The stock market is going to go up and down. I don't want you to panic and sell off your portfolio because you're having a bad day. Just hang on and look at the long term, because you will end up seeing success. And the second one I want to give you is, if you're on the internet, if you're in Facebook groups or chat groups, you are going to constantly see people asking questions about meme stocks or these next hot options that are just going up in value. And I would encourage you, stay away from all of that stuff, especially as a beginner. And there's really two reasons that I want you to stay away from them. The first one is that you're new to investing and you don't necessarily know what to look for in a solid investment. And the second one is, when you hear of these stocks getting hyped up, odds are the hype has happened after they've already gone up in crazy amounts in price. So if you're going to buy in after it's gone up a ton in value, odds are you're going to buy in high, and then it's going to come back down to reality, and you're going to end up selling lower than what you got in, which is going to do nothing but lose you money. And honestly, that's a ride I don't want you to get on when it comes to a beginner starting to invest. And I'm cool if you want to buy stocks or buy individual holdings. The only thing that I really want to encourage is that you've got that stable investing base first. And that's why I want you to start with index funds. So if you were to look at my portfolio, because I am preaching index funds in here like crazy for a beginner, I do not have only index funds, but I promise you probably 75% of my portfolio right now is index funds. And every week when I dollar cost average in, because we get paid weekly, I put 50% of all that money that I'm investing into stable index funds to build up that base. And out of that other money that I am investing, so 50% are going to index funds, the rest are going to individual stocks. And I'm not going to lie, I take 10% of that other money that I'm investing and I put it in very high risk growth companies. But because I already have that stable base with so much index funds, that if those growth companies pan out for me or they don't, it has a minimal impact on my overall portfolio. I would never look at putting all of my money into one stock or putting it into some crazy high risk potential company, just because if I did lose out, I'd lose a huge chunk of my money. And I'm going to place a link to my portfolio when I do those portfolio reviews, so you can actually see the strategy that I go through and watch me dollar cost average in for the week, just to get a feel for what it looks like. And my recommendation to you is, if you do want to buy individual stocks, I'd really encourage you to get at least $1,000 in VTI or some sort of index fund first, just like I stated, to build that stable base. And if you're really wanting to get into stocks, let that motivate you to build that base up quicker, right? I wouldn't encourage you to not put into index funds and start with stocks right away. I would say let that drive get you to build up those index funds. And the last real tip I'm going to give is, don't invest in anything or a company that you don't know anything about just because you see that their share price is going up. You know, take the time to do your own research if you're going to buy a stock. And if you don't have time to do the research, it's not a big deal. Take that money and park it in an index fund. And honestly, you'll probably do better than the stock that you were going to buy anyways. And again, just to re-emphasize the points I made earlier, none of this stuff is complicated. From my experience, all you need to do is have a plan and be committed to sticking to that plan for the long run, and really make sure that you put your emotions in check and you don't let them drive you buying things you shouldn't or selling off when you shouldn't, right? That's really important when it comes to investing. And hopefully you found this video helpful and simple, and you can use this information to get started investing. If you're interested in investing, like I stated earlier, ton of different links down below. If you want to support our channel, I'd encourage you to smash that like button and subscribe. Like I said earlier, comments are always welcome. And I hope to see you back here next week where we're going to talk more about saving, investing, and spending money. Thanks for watching. Have a good weekend.